Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 24th of October 2020 and we're publishing our gold and silver weekly update for the week ending the 23rd of October. We also briefly look at political events and economic reports which could shape what happens to the US dollar and therefore precious metal prices this coming week. Gold rose $3 last week from $1,899 to $1,902, having hit a high of $1,931 and a low of $1,895, a rise of just 0.1%. In sterling terms, gold finished the week at £1,458. That's down £13 or 0.9%, and in euros it closed at €1,604. That's down €17 or down 1.1%. Silver rose 45 cents from $24.18 to $24.63, having hit a high of $25.30 and a low of $24.14, a rise of 1.8% following last week's fall of 4%. In sterling terms, it closed at £18.88. That's up 17 pence. Or 0.9%, and in euros it closed at €20.77. That's up €0.14, or 0.7%. The gold to silver ratio fell from 78.5 to 1 to 77.2 to 1. So as we commented last week, it does seem that the gold to silver ratio for the moment is likely to vacillate between 75 to 1 and 80 to 1. Bitcoin, interestingly, is up over $1,600 this past week and currently stands at $12,951. It's quite interesting, as we've heard over the past few weeks, certain analysts saying Bitcoin is doomed to fall, while others are saying it may very well attempt to rise to this $15,000 level and test its highs of just over 20. Be interesting to see what happens. The Dow Jones closed on Friday at 28,335, down 28 points on the day and down 271 points on the week. The S&P 500 closed at 3,465, up 11 points on the day but down 18 points on the week. And the Nasdaq Composite closed at 11,548, up 42 points on the day but down 123 points on the week. So all equity markets in the US down, but a very small amount. Brent crude closed at $41.77, down $1.16, and WTI crude closed at $39.85, down $1.03 on the week. Again, both of these moderating close to that $40 level. The dollar index stands at 92.77. That's down 0.91 on the week. So once again, the dollar index has closed below that, what we term psychologically important level of 93. Now, our conclusions last week stated, quote, "So gold in our view has an absolute floor of 1800 and a strong support level at 1850. With resistance seen in a number of steps between 1927 to 2000, which is why we can to a large extent comfortably say that $1,800 to $2,000 gold remains our short-term target range. Still, unexciting for sure, but probably consistent. Again, we are more comfortable with our assessment of silver trading generally between $22 to $27, and most likely between 23 and 26, unquote. Well, gold this past week, although seeing some abrupt rises and falls, still managed to operate within a relatively tight band of just $36, which is a very small band to operate within considering its current price. What is interesting is that we are just less than 2 weeks away from a presidential election in the United States. Also that the number of COVID-19 infections and deaths are on the rise, not just in the US but globally too, and yet gold has had a relatively subdued week. The moderately good PMI flash figures announced on Friday, good certainly compared to expectations, took the edge off any rise that gold was hoping to achieve to end the week with. And both manufacturing and services PMI showing gains on the previous month made sure that gold was going to be somewhat tempered. Germany too announced strong manufacturing PMI again, better than expected. So, from a technical point of view, we have gold hovering just below the 10-day moving average, regarded as its first resistance point of 1906, with support around October's lows of 1,872. Now, for those who do not understand or necessarily follow technical analysis, one of its most rudimentary assessments is to gauge resistance and support at its previous month's high and low or current month's high and low. And this is outside of moving averages or Fibonacci calculations, etc. But it's not a bad quick glance guide for the onlooker to perhaps gauge an assessment of where gold or silver prices are likely to suffer resistance or receive support. But I caution, it's a very quick flash guide, as I call it. Now, short-term momentum has turned positive, while medium-term momentum remains neutral to positive, with the MACD showing a slow trend higher. So it sounds great. But that said, there are countervailing signals in that gold has formed what is regarded as a shooting star or a negative candlestick, which usually preempts lower prices. So whilst we cannot rule this out, we're approaching the US general election. There's bound to be some degree of uncertainty and, even though it might be small, some market turbulence. So with this in mind, we're still comfortable predicting that the likely trading range for gold will be between $1,850 and $1,950, with $1,800 and $2,000 as extreme outliers. Now, apart from its initial opening, silver remained in positive territory throughout the week. Like gold, though, operating within a relatively tight band of $1.16, but percentage-wise, it's a larger band than gold. What did appear apparent was that while silver headed for $25.50, we're finding significant resistance close to this level. Even looking at the monthly chart, we can see silver only just managed to breach it at $25.58 over a one-day time period. Now on Friday, silver fell back like gold and is now below the 50-day EMA. There is support at $24 and in a number of steps down to $22, which really is at the lower end of our prediction field, certainly for the next week. And there's resistance at $25.50. Our outlier range for next week, therefore, rests between, and this is what we deem as our extreme outlier, $22 to $27. It's a relatively large gap, simply because we have seen silver in the not-so-distant past move more than $5 literally in a day or two, but with a more likely trading range of between $23 and $26. So, supporting these price predictions rests on the oncoming economic news we have scheduled for next week, which, fortunately or unfortunately, depending on one's point of view, is more robust and demanding than the past week's news showed. So on Monday, we have new home sales for September. Tuesday, durable goods orders for September and core capital goods orders for September. We also have important consumer confidence index for October and the home ownership rate for quarter 3. Now, Wednesday, we have the advanced trading goods deficit for September. Thursday, of course, our normal weekly jobless claims report. But also we have GDP, gross domestic product, for quarter 3 and pending home sales index for September. And then on Friday, we perhaps would argue the most important day, personal income for September, consumer spending for September, core inflation for September, employment cost index for quarter 3, and the final consumer sentiment index for October. So some quite significant data ahead of the US general election for analysts to get their teeth into, and especially the Friday data set, though Tuesday could indeed have some impact. Now we have to admit that precious metal price performance has somewhat disappointed these past few weeks. Yes, we did previously have multiple year highs for gold being reached and silver too rising to its highest level for over 7 years. And frankly, whilst we suspected both could go a little higher, we did put a very firm and close cap on both of these precious metals. Interestingly, hundreds of dollars and in some cases thousands of dollars lower for gold and at least $20 lower for silver than many of the pumpers were exhorting, and in our view extorting you to believe was going to happen imminently and certainly before the end of the year. Now that said though, we're still disappointed, not necessarily because those levels weren't breached, but that this past month we did expect more excitement and at least greater vacillation between highs and lows. It's almost as if the markets really do not care or have turned a blind eye as to whom is going to win the US elections on the 3rd of November, or perhaps has accepted already whom it believes will win. Now there is contradictory evidence for sure. Major unemployment, house repossessions rising, and potential further lockdowns ahead. And yet economic data, whilst not robust in the true sense, has been better than economists' worst fears. We can see that the US dollar is under a little pressure, though it keeps bouncing back above that 93 index level. And of course, with even Dr. Fauci now stating that he believes there will be a vaccine available by late November, early December, this has to some extent allayed the fears that the COVID-19 pandemic is here to stay indefinitely. What we haven't covered so far, and will be interesting to observe, is whether Congress does manage to pass a stimulus bill this coming week, and if so, the size of that bill. Be interesting to see then how markets react to that. Now, all other things being equal, we expect gold to move between $1,800 and $2,000, with $1,850 and $1,950 being the most likely range, and silver between 22 and 27, with 23 to 26 being its most likely trading range this coming week. What do you think? Do share your thoughts. And finally, before we go, just a brief reminder that yesterday we published a video entitled Physical Gold Demand Down, but for how long? And over the course of this coming weekend, we will be publishing part 3 of our new series Peak Gold, and also on the Richard and Greg channel, another issue of Empires and Dynasties. And we apologise for the fewer videos we produced this past week, which essentially was due to a systems or computer failure within our office. Meanwhile, thank you so much for listening. If you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so that you're notified of our videos as and when they are published. We wish you a safe, enjoyable weekend, and as always, a most prosperous week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.